So this is something that's been born really out of need, just trying to explain the different taxes. So I'll look at the company versus and company individual taxes and the differences between electric and non-electric cars, because the contrasts are quite alarming. And then we'll just touch on EV charging points and what I say government grants. It used to be government grants. Probably just need to do that now, and it's more like a government grant. But we'll come on to that as well. So the big thing is we get asked a lot about what can businesses do to mitigate their taxes. The two big ticket items are pension contributions and electric cars. I'm not here to talk about pension contributions, that's that chap's domain over there, but I'm here to talk about electric cars. And you know, when you buy an electric car through a limited company, this is specifically aimed at limited companies, but when you buy an electric car through a limited company, the cost of that car comes off of your profits. Okay, so it reduces your corporation tax, and we'll look at the numbers in a minute. There are other options that you can do with regards to contract hire, contract hire agreements. So you've got choices on cars whether you own them or lease them. There's different advantages, pros and cons for leasing. You know, I think personally, we'll come on to the VAT in a minute as well, but if you're VAT registered, leasing really does make good sense. It takes away the upfront cost of an electric car. Sometimes the deposits can be quite high, even if you buy it on finance, on hire purchase. So contract hire is something that if you're VAT registered business and you're looking to, you know, no one really knows what the second-hand car market is going to be like for electric cars. So there's an element of, do you want to take that risk, or do you want the company to take the risk? I've done leasing now for 15 years, and I'm pretty confident that I've made money over those lease deals because of the way the second-hand car market's gone. And if you think about that, over time, there's more and more electric cars being made. I think there's more electric cars being made than non-electric cars at the moment. And if you get an influx, a flood of electric cars coming onto the second-hand car market, that's going to devalue the price of those electric cars, because obviously buyers have got more choice to choose from. But add to that, of course, you've got more buyers coming into the mix as well. So you've got more cars, more buyers. So I'm not, you know, no one's going to try and second guess what the second-hand car market's going to do. But certainly leasing, even if you're not a VAT registered business, leasing is still something to think about and consider and look at what those options are. And it can, you know, when you buy a car, or take out a car, you get the option of whether you want to lease or buy. Non-electric cars, you think 100% for electric cars, the best you're going to get is 18% for a non-electric car. And again, we'll look at the maths of that in a minute. The relief is spread over the years of ownership rather than upfront. And if you do contract hire, then rather than 100% corporation tax relief on the hire costs, you only actually get 85% of the hire costs. So you're already at a 15% disadvantage before you've even started. So just looking at some of the numbers then. So I've based this on a £60,000 car. It's a rough value, it's a round number. It's a rough value of a Model Y, which is one of these bigger ones out here. You've got Model Y, Model 3, but anyway, the £60,000 Model Y, fully electric car. As you can see, that's immediately going to reduce your corporation tax by £15,000. Corporation tax has just gone up to 25%, so you're going to get a quarter of that back up front, straight away, off your corporation tax bill. So that's quite a big incentive. You're getting that tax relief as well at the point you're buying the vehicle. So if you're going to buy it outright, you want the cash. It's all about cash and cash management. So if you're going to buy that vehicle for £60,000, you're immediately going to get 15 grand back in tax relief, or in physical tax. Even better if you were to buy £60,000 car on finance. So if you do it on hire purchase, you're still going to pay. You're going to pay the value of that car over a 4 or 5 year period, whatever you agree. But you're still going to get £15,000 off your corporation tax. So if you think about the cash flow, put down a deposit. You also then spread the cost over a period of time, but in year one, you're actually in a positive cash flow position. When you sell the car, obviously we haven't put sell because obviously it depends when you sell it, but when you sell the car, you're going to have to pay tax on whatever you sell the car for. It acts as like a normal sales invoice. But the reality of the situation is that if you sell a car, chances are you're going to buy another one. So all that happens is one offsets the other. So if you sell the car for 30,000 and buy a new one for 40, your cash out is 10 effectively. So you're getting tax relief on 10. So you actually only lose at the point that you go, right, that's it, I'm not going to run a business anymore. And to be honest, you probably hopefully would have sold your business, and that's the least of your worries, to be honest. Just compare this to a non-electric car. So you can see a £60,000 car with electric was £15,000 off your tax bill. Non-electric car, the best you're going to get is 900 quid off your tax bill. It's just, it's astonishing, absolutely astonishing, the difference. And it depends on the CO2 emissions, but effectively, you know, you're looking at, well, Craig, who produced this slide for me, he actually followed the spreadsheet all the way down, and he worked out, rather sadly, that it would take 68 years to get full tax relief on a vehicle. Now, firstly, no vehicle's going to last 68 years, and hopefully none of you are going to be in business for 68 years. But that's how long it really takes to get the full relief, whereas electric is year one. Suddenly see the car manufacturers go into overdrive, no pun, but go into overdrive to try and increase the ranges and reduce the CO2 emissions that cars, and you know, you look back 10, 15 years ago, and an Audi A3, for example, would do 110 grams per kilometre, and you think, God, that's amazing. And now that's a really high emitting car. And the benefits, you know, we're seeing the tax as a massive driver towards what the car manufacturers do. So leasing, what I've done an example here with the leasing contract hire costs. So with the example we've done is £1,000 plus VAT. So we've got a rental payment of £1,200. If the business is VAT registered, you'd immediately reclaim half the VAT back. So of £1,000 plus VAT 200 quid, that's £100 back on your VAT return. Most of you do VAT returns here, so you know what I'm talking about with VAT returns is that that's £100 that you're immediately going to reclaim back from the government. So your net payment there is £1,100. That comes off your tax bill again, 25% tax relief, so that's £275 off your tax. Now non-electric cars, obviously it's 85%, so you're not, it's still okay, but it's not as good as it is with electric. And you know, I think if you're VAT registered, like I said earlier, if you're VAT registered, then this really does make sense to me. It eliminates the risk of the second-hand car market, and I think even if you're not VAT registered, I think it's still something that should be seriously looked at. Just ultimately cash, isn't it? It's what you want to keep cash in the business. Individually, I rather like this car. I don't think it's available yet. I think it's the Model Y, not Model R, which is coming out later this year. So have to think about yourself as a director of a company. You're a director, you're an employee of the company as well. So you are taxed driving. If the company owns a vehicle, that's a benefit in kind on you guys. So you're driving, it's a perk of your employment, is how you have to look at it. Although the business may be yours, you're still an employee. It's a perk of the vehicle, having the vehicle. Electric cars, there's a benefit in kind calculator. Electric cars is 2% of the list price. So we'll look at our £60,000 car and what that means as in hard cash terms. Non-electric cars can be as high as 37% of the list price. So again, a big difference. It's dependent on the CO2 rates. But one thing the government have done is they've frozen these rates until 2025, 2026. So we've got another 4 years of these, 3 years of these rates being at the same level. And then in year 4, it increases by 1% up to a maximum of 5% of the list price. Still way, way better than non-electric cars. And to be honest, I can't remember the last time a client of ours actually put a non-electric car through the business. It just doesn't make any sense at all. As an employer, Companies have to pay Class 1A national insurance on any benefits that their employees have. So if, as a director, you've got a benefit in kind because you're driving around in a company vehicle, there's a national insurance charge that the company has to make once a year, which is the same rate as the employer's national insurance, which is 13.8%. And again, I'll look at the numbers, put some numbers on that for you. And then you pay tax on the benefit in kind. And one thing that's quite interesting is salary sacrifice. So if any of you've got big workforce, you've got a team behind you, then you may not realise this, but if your employees wanted to think about going down the electric route and getting an electric car, then they can come to you as the employer and say, can I do a salary sacrifice arrangement? And you think, well, what's a salary sacrifice arrangement? What that means is you agree to take the lease of the vehicle rather than them, but you recover that lease cost by it coming off their gross pay. So not their net pay, but their gross pay. And what that means is that they, as the employee, pay less tax and national insurance. You, as the employer, pay less employer's national insurance. So you're all better off because of this. It has to be done properly because salary sacrifice arrangements have consequences with regards to redundancy and sickness and holiday rights. So it has to be done. You can't just go, will I hire a car and take it off of your gross pay? It has to be done through a proper salary sacrifice company. But this is really interesting because the government have frozen the tax rates now up to 2028. That's a long time. When you're talking about inflation as we've been having recently of over 10%, everybody is being dragged into a higher tax bracket. There is much more people now being dragged into the 40% tax bracket, though people being dragged into the 45% tax bracket. Child benefit is another one. The child benefit threshold is £50,000. So anybody who receives child benefit and earns over £50,000 has to pay some of that child benefit back. So more and more people, so we're getting questions, not just from business owners, but from employees as well, to say, I've had a pay rise, I'm now going to go into another tax bracket. What can I do to get me back down into the other tax bracket? I don't want that pay rise. I need to do something. And touching back on the pensions is one thing, but this is salary sacrifice for an electric car is another. The group we had in earlier, two of the staff that she had just gone out and gone electric cars, and she said to me, if I'd known that, I would have got the electric cars for them and then deducted it off their gross pay and done a salary sacrifice arrangement, because it can be any member of staff. You're all better off anyway because of it. But if they're going up into another tax bracket or having to pay child benefit back, this is really attractive because actually the benefits are huge. And I think certainly with the larger organisations, I think the salary sacrifice is going to be a massive thing, a big player over the next few years, because the government have frozen those tax rates, and people are they don't feel like, why should I go into 40% tax when I can do something about it? And so this is something really to pass on to staff as well. One thing you've got to bear in mind is if you did go down the salary sacrifice for any staff, is you don't want to go and buy the vehicle. It's a case of lease the vehicle and you're claiming those lease costs back off their gross pay. And that's kind of how it works. Now, when you sign up for a leased vehicle, obviously you're signing up for a period of time. So one thing that needs to be managed is what happens if that employee leaves whilst you still got, because the agreement is between you as the employer and the car company. You've agreed to lease that vehicle for that period of time. So what's the get out? So these are the things that need to be thought about. But a proper salary sacrifice company would arrange all this for you and go through those options with you, because you can either, if you're big enough, you can generally find someone else will take the vehicle off of that employee, or there may be a way you can hand the vehicle back to the company. I mean, I've got myself out of lease contracts before where I've gone, actually I don't want that anymore, I want that one, and they'll get you out of the contract. They're quite happy if you're in the agreed mileage. You feel like you've got a burning question to ask.
How does it work with the deposit?
So what you do is you add up the cost over a period of time. So if you sign up for a 3-year period, a 3-year lease, for example, you add up what those costs are over 3 years and divide by 36. So the deposit is part of that cost. So a typical contract hire agreement, you used to, with non-electric cars, certainly non-Teslas, is you would pay 3 months up front and then 35 equal payments over, so the whole thing was over 36 months. With Tesla, I found it was a case of what do you want the deposit to be? And I could pay as little as nothing or do a massive deposit, but whatever deposit I did reflected on my monthly cost. So if I did no deposit, I had a higher monthly cost going forward, whereas if I did a higher deposit, obviously it was a lower monthly cost. I did the no deposit, thank you very much, and I'll just pay it over a period of time. So that's how it works. Let's just put some numbers on this then. So a £60,000 investment electric car, the benefit in kind is calculated at £1,200, so 2% of £60,000. The company immediately has £166 to pay. Compare that to a non-electric car for the same value, 166 compared to 2,567. So there's a big difference there between the two. Because if you think the taxable benefit on an electric car is £1,200, a non-electric car emitting 130, which is quite typical, 18,600. So it's a huge difference, absolutely enormous, which makes the Class 1A national insurance different. And again, you look at what the individuals, you as the employee would pay. If you're a basic rate taxpayer, you're just paying £240 in tax a year, 20 quid a month as a benefit, as physical tax going out of your salary. Compare that to a non-electric car as a basic rate taxpayer, £3,700. £20 a month compared to over £300 a month. That's a big saving. If you're a high rate taxpayer, obviously £480 compared to £7,440. And if you're 45% taxpayer, £540 to £370. Now, most of you here, we try and keep you outside of that 45% tax brackets. And we're always looking, working with you guys to keep your tax bills down as low as possible. But this could be really important, going back to the salary sacrifice. If one of your members of staff suddenly, that's a big difference.
So that's even a difference rather than giving them the money. So if it is just, regardless of whether it's going to tip them over, if you're going to give them, okay, 60 grand's a lot, you're not going to give them 20 grand a year for 3 years,
yeah.
But they would pay something more than that in tax on the cash.
Yeah, 100%.
If I want to lease my own vehicle, can I have
absolutely,
or whatever?
And as a director as well, think if you're a director and you want to go down the electric car route or even a car route, and you think, I don't want to go down. I'll get a non-electric because I'll run it outside of my company and I'll charge mileage to my company, but you still got to pay the dividend tax to draw the money out of your company to pay for the car in the first place. So even the saving there, and this is what Luke and I did, is ultimately we looked at it and went, well, not only are we saving tax here, but the difference between here, we're also saving dividend tax as well, because we're not having to draw that money out of the company to pay for a car that we're going to run personally. It's what cars are available to you. Now, it's unusual that someone would have more than one car. I've never known a situation actually where we've had more than one car. We'll have one car in the company and say that's the car that's available. What you might find is where you've got a husband and wife situation, is you might find that car might be shared between the two of you. So you split the benefit in kind by half. Or you might find that actually if there's two electric cars and there's a husband and wife, you might find actually it might be beneficial to bring the wife on the payroll, or not trying to be sexist, or bring the husband on the payroll if it's the wife's business. So you might, those are things that we would look at and think, well, actually, is the other spouse, what's the other spouse's situation? Are they earning money? Are they not earning money? And we work, we try and work these things out because everyone's situation is slightly different. And sometimes we won't act for the spouse. So we'll act for one but not the other. So we need to go and understand what the financial situation is and what can we do in that case. So, and be creative. Okay?
Yes.
So going forward, because most people are looking at cars for at least a 4-year period of time. It's generally what the average ownership period is. So the government have frozen the benefits in kinds for these 2 years, and then we're going up by 1%, like we said earlier. So you can see from a cash benefit in kind, it's going up in £600 based on a £60,000. What does that mean for national insurance for the employer? So yes, it goes up, but not by a huge amount. And then a basic rate taxpayer currently would pay 240 quid, going up to 360, 480. So not big figures. And if you think that it's going up for electric cars, it's also going up for non-electric cars as well. So in actual fact, the savings become even bigger. Before I move on to EV charging points, has anyone got any questions about the taxes, or have I kind of...
I thought it was, you had to purchase the car, you can lease it.
Yeah.
Is that
You can lease it. Yeah, if you can buy the car on hire purchase. You can lease the car like as a contract hire agreement.
So business doesn't have to own it?
No. If you do the contract hire, I mean, ultimately he has to own the vehicle in order to get the corporation tax relief. But if it doesn't own the vehicle, it's renting the vehicle, then you just get what I say, you get the tax relief on a pay-as-you-go basis. So that's what you pay in the year, and that's what you get your tax relief on. But and sometimes it's not clear in the agreements whether, and a lot of people enter into these agreements not really knowing whether they own the vehicle or don't own the vehicle. And I always say my overriding question is, well, who arranges payment of the road fund licence each year? And that generally answers that question. Because when you lease a vehicle, the vehicle is taxed for you by the leasing company, not by you as the owner, not by you as the user.
Is that the same for the MOT and service costs?
No.
Would they come out of the... How would they work?
So exactly the same. So all of the costs associated with the vehicle are all an expense in the accounts. They're all corporation tax deductible. Even though with an electric vehicle you still got to get it MOT'd after 3 years and then every year thereafter, that doesn't change. That's a law regardless of whether it's electric or non-electric. But what you find is with servicing, certainly the electric cars just don't need to be serviced anything like as much as a non-electric car, because there's just less moving parts. Now you find typically with some manufacturers, they will get you into a service agreement or insist that you have the car serviced every 12 months. It's not the case. And my advice with electric car is don't go for a service agreement and just pay the service costs as you go, because actually you might find that even over a 3-year period, you might not even need a single service in that 3 years, because there's just no... You need to watch the tyres, obviously, and electric cars do... The wear and tear on tyres is more because the acceleration is greater, so it puts up a little bit more burn on the tread, and the heavier. But the braking, you get the regen braking, so the brakes are not reused that much. You just take your foot off the accelerator, and that's you slowing down as though you're braking, and the brake actually just acts as an emergency brake. But I asked the guys here, when would mine need a service? And they said, oh, you might need one by the time it has an MOT, we'll see. Depends how much mileage you do. You know, that's how laid back it is. But we'll call you when we'll get a message, and you'll get a message to say your car needs to be serviced, because it'll detect that something is not quite right. But they said categorically, you will replace the tyres before the car needs to be serviced, because there's just hardly anything to service. And back in the day when electric cars first came to be, you could tell, I mean, it was hilarious. My wife had an electric car about 9 years ago, and the first time I went in for a service at Mercedes, I said to her, I bet no one has realised that it's an electric car until they suddenly go to turn the key and it makes no sound. And I said, I guarantee that you'll get a phone call at about 4 o'clock this afternoon, because they'll need to keep it back because they haven't prepared themselves for an electric car service. That's exactly what happened. They were like, oh, you'll have it back tonight, madam. And she's like, I don't think I will. And then they were like, she got a phone call an hour later, and they said, oh, it's an electric. We didn't realise it's an electric. So they just didn't have the right equipment to do it at all. Obviously Tesla just do so all they do is electric. So it's they're geared up for it.
Probably a stupid question, but
Yeah.
if it's an employee's car, who pays for the
Servicing.
tyres and stuff?
You as so it's what you can agree ultimately. I mean, if you're are you talking about a salary sacrifice?
Yeah, so
Yeah.
if the tyres pop and it's the company's leasing the car, so it's their...
It depends what you agree with them ultimately, with the employee. Yeah, with the employee. So you could say, well, actually, we'll cover those costs, and maybe take a bit more off their salaries. Or you could say, well, actually, you're responsible for the running costs of the vehicle. You're responsible for the insurance of the vehicle. We're not getting involved in that. We're just going to provide the car for you. But it's what you agree with your employee. As a director, all of the costs can go through, even the insurance. So even if the insurance is in your own name, because you want to protect your no claims, you can still put that insurance cost through the books. It's obviously not coming out of the company bank account, it's coming off of your personal bank account, but you can put the cost through your director's loan account. So you can still claim the insurance through here.
And any costs that the employee picks up,
Yeah,
the company pays for and gets
the VAT back.
that back.
Yeah.
And then we still get the money back from the employee.
Yeah. So you can do it so that we have certain situations where we could pick up if we bear the cost of that, we can claim the VAT back and then effectively recover the net amount back from the.
So you would take the net amount from the staff.
Yeah, it's the same with the lease cost of the car because you're going to claim half that VAT back. So you're actually only going to, all you're doing is deducting the employee's pay by the amount you are paying, not ex VAT. Yeah.
Okay. But so is there a difference between salary sacrifice and company cars? 'Cause a company car is usually under a company car policy.
Yep. So if you do a salary sacrifice,
Yeah.
what you're doing is providing them with a vehicle. Okay.
Everything else is their responsibility.
Yes. They still have a benefit in kind because you are providing them with a vehicle. They're still driving around in a company car, but effectively you're allowed to take it off the cost off their gross pay. So
Then in our best interest to ensure that they are insuring it.
exactly. Yeah, you don't want employees driving around in cars that are not insured. And you'd have to be very specific when if you do go down the leasing option, you have to be very specific with the insurance company because they always ask you who owns the vehicle, who's the registered keeper, and who's driving it. And of course, all the answers to all three of those questions are different. So some insurance companies go, oh, we can't cope with that, so you can't be insured with them. I use NFU myself, and it was fine, didn't find a problem. A few years ago, I think there was only one insurance company that would take on, would insure drivers where companies had the vehicle leased through their company and they were director. But now many more, because it's becoming more and more common because of these changes and incentives, insurance companies have now changed their model and it's now a lot easier to insure the vehicle. But there's still some, I don't think Direct Line do, or certainly not last time I looked, but NFU do, I know that. Yeah. EV charging points, so this is something that's, obviously if you do go down an electric car route, one of the things you want to be able to do is charge it. With a Tesla, for example, there's no superchargers, other than here where you are at the moment, there's no superchargers in Dorset. For me it's not a problem because I have a charger at home, so I just charge it at home overnight and it's fully charged in the morning. But you need to, if you do drive it around, you need to see where the superchargers are around the country and plan your journey a little bit more. But to getting EV charging points, you can get them installed at home as a director. You can get them installed at home. That cost can still go through the company. So if your company can do that, and if it's VAT registered, it can claim that VAT back as well. The proviso being, and I don't know how this works in principle, but the proviso being is that if you move house, the charging point moves with you. Now, I have no idea if I was to call a charging point company and say who installed our charger point at home and said, "Can you take it off the wall, please, and move it to our new house?" I've got no idea what they would say. But I have to be honest, I said we still claim the VAT back in people's accounts. So we're going to carry on because at that point in time, how can anyone prove that they're not going to take the charging point with them? So we still claim.
It's because it's an asset of the business. So if you moved house, it'd still need to be an asset of the business.
But who's going to know? I can't. I don't think I've ever known anyone move house with HMRC over their shoulder looking at what they do. So, if you do have a charging point installed at home, one of the questions we get asked is there any benefit in kind on the employee or director? No, even though it's being used to charge a car for personal use, there's still no benefit in kind. Obviously, if it's at home, the electricity is provided by the employee. But even if it was provided by the employer, there's still no taxable. So if some people work from home, and they might have a situation where the electricity is provided by the employer, but unlikely. And obviously at business premises, it's clearly a given that you can get EV charging points installed at business premises. There is a grant out there. So it should be singular, not plural. But there is a grant out there run through the Office for Zero Emission Vehicles. I can imagine they're really busy. But the grant covers the lower of 75% of the installation cost, or £350 per charging point, up to maximum of 50 sockets. I haven't come across anyone yet that's installed 40 charging points at their business premises. But basically, you go onto their website. You get given a reference, a voucher reference, and you type that, provide that voucher reference to the company that's installing your charging point, and they'll knock 350 quid or 75% off of that. So quite handy. There are a few constraints, but nothing I don't think that's going to affect you guys. You need to be a registered business, charity or public sector organisation. You need to have dedicated off-street parking. The reason for that is fairly obvious. They don't want to be giving grants to employers to be putting EV charging points on streets, because that's a completely different kettle of fish. That's done through a completely different system. If you don't own the property, you must have permission from the landlord. And the last one, not received more than €200,000 of public support or 325,000 special drawing rights. I had to look at what a special drawing right was, and all I could come up with is it was basically like a cryptocurrency that was invented by the International Monetary Fund. So I thought we can disregard that. And then that's it, really. Any questions that anyone wants to ask that hasn't already been asked, or shall I get Robbie in to just talk about some of the charging points?
How far away from you?
Okay, so I can get to London and back on one charge. I think from Dorchester you probably need to top up at Fleet Services, but probably not for long. I did a bit of a journey on Wednesday. I had to go up to see a client in North Oxford, and then go along to Bristol, and then back down home again. And all I did was work out, okay, where are my charging points on that journey I'm about to do? Where are my charging points?
How do you know?
Because you can look on the app. Yeah.
Cool.
So you look on the app and it tells you where all the charging points are. Yeah. And it also tells you how many are available. Yeah. And what I did was work out what's my last supercharger that I'm going to go past, and where does that fit on the journey. And I worked out it was the services on the M4 just before I come into Bristol, and there was 14 charging points there, Tesla superchargers. So I just stopped in there, had a comfort break. In that time, I just walked into the service station, went to the loo, came back to my car again. It added 100 miles range onto the car just in that short space of time.
Have you?
That's because there was no other cars there, so I was the only. So all of the juice was going straight into my car, and the rates the car charges up at varies depending on how many people are using it. So the lowest I've had is 250 miles an hour being added onto the car in range. The quickest I've had is over 1,000 miles an hour, which is when you've got the whole thing to yourself. It's just literally, I don't know how the car copes with it, but everything's going into it. So,
how does that compare to charging at home?
Charging at home is an overnight job. What I find is that if you don't use a supercharger, and what you get at home, it depends on the current on your electricity at home. But I find I charge up at 30 miles an hour at home, so an overnight will top me back up again. If I use a public charger that's not a supercharger, again, I'm getting about 30-mile range. If I use a 3-pin, so just plug it into a plug socket, I wouldn't advise that. You'll be there forever. That's 3 miles an hour. And when you're topping up to about 300-mile range, that's a long wait. So, and I don't particularly want my car to be sat there for 4 days not being used.
So on a full charge, you can get how many miles?
So it depends how you drive. So for you, probably not very far, Kelly.
Yeah, I can slow down.
Realistically, if I go to London and back, it's about, depending on where in London you're going, but I can do about 230 miles on one charge, which is going up and down the motorway.
Yeah.
I keep my speed below 80, but I hover between 70 and 80, and I can do that. But as soon as if you put your foot down,
Yeah.
then you watch that range drop. Cold weather was another one.
Yeah.
So if in the middle of winter, when we had that cold spell just before the weekend before Christmas, when it went ridiculously cold, I made a journey up to Cambridgeshire, and we hit Milton Keynes, and the temperature went down to -8 in the snow, and I was and in the dark, so I had everything on, and the car was trying to keep the battery warm, and I was losing 3 miles of range for every mile I was driving, but I knew how far I was to the next supercharger, so I'd already done the maths in my head. I already knew how far, because the car's telling you how far to the next supercharger and how much battery you will have left when you get there, and when you're going to get there. So if you listen to the car, you will be fine. If you don't listen to the car,
You think you know better?
you think you know better, then yeah, you expect. Well,
What happens if you run out? Is it RAC charging?
I'm going to get I'll get Robbie to explain this one, because again he was showing me that it used to be that firstly, when you get to zero, okay, you don't run out of light, you don't run out of juice. When you get to zero, you still have about 50 miles worth of range on your car.
At 20 miles an hour.
Well, yeah, you go into what, yeah, but limp mode, yes. I didn't want to call it limp mode. It sounds disgusting, but but essentially, you can get another 50 miles in an emergency when you get to zero. But obviously, the guys, they don't want you to do that, because you're not, you know, if you get to do that regularly, you're really deteriorating your battery. So, you know, but it's there in an emergency. It used to be that if you did actually physically run out of electricity in your car, you used to be able to, a flatbed is the only way of getting that car back to, that's not the case anymore. The AA have invented these wheels, so literally they just swap the 2 rear wheels, take the 2 rear wheels off, put their rear wheels on, and they can lift the front up and tow you back to wherever you want to go. So the infrastructure that supports these cars now is improving at such a rate. I can't keep up with it myself, and even Robbie, you know, they have to go to their exhibitions occasionally, you know, or regularly, to understand what the technological advancements are that are being created all the time. Because in the short space of time I've had mine, which is 10 months, it's been, you know, the technology has been unbelievable. And even in the Tesla as well, you get a software update that comes through every probably week or two, and they add new things to improve the technology in the car. Cost-wise, because that's probably a question that some of you may have not thought about to ask, how much does it cost to charge up a car? I've worked out that if I charge up at home, it's costing me about 4p a mile to run the car in electricity. If I use a supercharger, it's costing me between 13 and 14p a mile to run the car. So although they're quicker, they're more expensive, but still half the price of fuel. So if you think fuel is, even if you've got the best car, the most fuel economical car going, and you find the cheapest petrol station going, you're still looking at 22, 23p a mile to run a car on petrol. So you
That's
know.
on standard electric rates. There are, so Octopus did, don't know if they still do their Go tariff.
Yeah, so depending on what tariffs you got at home,
Yeah.
I'm on a lucky me, I'm on a fixed tariff until July. So all of the price increases that a lot of people have felt over the last few months, I haven't had that, and I've still got my £60 a month off as well. So my direct debit went from 210. They knocked it down just before the £60 voucher thing came in as well. So they knocked it down to 180, and then I had my £60. So mine went from 210 a month to £120 a month, and I'm listening to the news going, that's just not going up at all. It's been amazing. But I'm on a tariff. I appreciate when I get to July and I come off that tariff and I go back onto a more regular tariff, then yes, my cost is going to go up. But that's what it's worked out for me.
But yet you can get ones that,
If
especially
you're
Tesla, you can charge between 1 o'clock and 4
Yeah.
o'clock in the morning.
if you've got a smart meter at home, the chances are that you're on a tariff whereby you use electricity at quieter times of the day, it becomes cheaper, and you can therefore obviously charge your car up overnight. It's a lot cheaper way of doing it than charging up during the day. The other thing as well is that since, I can't remember when it was, about 6 months ago, all new charging points installed at home are come with a little chip inside. So if you try and charge it up at a peak time of the day, let's say half time of the World Cup final, for example, you try and charge your car up, the national grid have the ability to switch it off. Because we can't have you charging your electric car now, so they'll just switch it off. I've not known it happen to anybody, but they have that power that if they will have the ability to do that, which does make sense.
They've got those in their smart meters
Yeah.
as well. They just don't publicise it yet.
Do they? Okay. But I think a charge up overnight is, I've never needed to charge my car up during the day, ever. So
So yeah, so Inverness, 250 mile range, you get 250 miles up the road. Then at your lowest supercharger, it takes you an hour to charge up again, and you can go another 250.
yeah.
But at the speed you were getting, the better one, it's a 20-minute.
Yeah, when I came back from Inverness, we stopped at Perth and did a top up at Perth. We then did another top up at T-Bay Services. I think we were at Perth for probably 20 minutes to half an hour. Topped us up to get us to T-Bay Services. T-Bay is North Lake District on the M6. We then did a full charge up to 100%, and then the next day we drove from T-Bay Services, North Lake District, all the way back here with one 20-minute charge top up at Warwick Services. And if
It's as long as you're stopping for a wee and a couple of coffees.
absolutely, yeah. 20 minutes was enough for the kids to get through the subway queue. Okay. Any other questions? Shall I go get Robbie?
The salary sacrifice scheme.
Yeah.
What sort of costs are there to setting that up and actually have
The
it
cost
work?
there's a cost, but much less than the saving you're getting. So otherwise it's worth your while doing it.
And so once you've set it up once, can you use that for every employee?
Oh,
And
yeah,
every 3 years?
I would imagine there's only I think 3 or 4 companies, a bit like the childcare vouchers when they were a big thing when they first came out. Is that there's 4 companies I think. Sodexo is the main one, but if you go online or come and speak to us and just say, look, we're thinking of doing this for our staff, we'll guide you through the process. One of our staff, he wants to do a salary sacrifice, so we're going to have to do it for ourselves in a minute anyway.